Hi, Tuesday, August 16th, 2016. Monaco64 here, home of alternative economics and contrarian views. I just made a video about an hour ago about currencies. I said the title was "It's the Currency, Stupid," in which I talked about how the mainstream media and, mainstream economists focus on the FTSE or the stock market, the Dow, and they don't really talk too much about the currency and how important that is. Because, for example, in the UK, the currency, is what everything is priced against. So this video here is about the dollar yen. I've just noticed the dollar has dropped over 1% against the yen. We just traded below 100 yen, which is very significant. We are, the low is 99.84, and as I'm doing this video here at midday London time, the dollar is 99.97. So if you remember well, in the end of January, the Bank of Japan cut rates to negative. They announced more QE, and instead of the dollar going up against the yen, since then it's come down. We were around 120, 122 back then. So the dollar has actually dropped more than 20%. So you see, the dollar is devaluing as well. This is a currency war. But ultimately, if the Americans or the people who run the dollar really want to devalue that currency and benefit the whole world, they'll have to do it against gold and silver. I'm not talking my book here. I'm just stating, what is natural law of currencies. The dollar is the reserve currency. The currencies that have the best track record, even before the dollar was around, thousands of years ago, are gold and silver. They're the ultimate arbiters of value. So if the U.S. government really want to devalue the currency and help the whole world be able to carry the debt load that the world has in a better, alleviate the debt load, they have to let the dollar go down against gold, i.e. let the price of gold go up. We will see if they'll allow that to happen. I think that's the only solution. FDR did that in 1934. That was, to alleviate the Great Depression and the banking crisis. Just when he was taking, being inaugurated in 1933, they had to close all the banks in 1933, the bank holiday. Americans were forced to hand in their monetary gold, their gold coins, and he made it illegal in 1933 just to keep the banks solvent. And then in 1934, January 1st, the Gold Act of 1934, he devalued the dollar against gold from $20.67 to $35 overnight. So not many people knew that. The U.S. government, it was a overnight profit for the people who had to hand in their gold prior to 1934 and 1933 at $20.67. They lost out. So that, that's the only way for the U.S. to do this. Going back to the yen, I've made videos before on how important the yen is. And I'll put the videos above about how it's used as a financing currency, because since around the end of 2012 or sometime around 2013, the yen had been depreciating, or the dollar had been going up, like from around 80 to all the way to 120. And interest rates were almost negative in Japan, so you could borrow or sell the yen and take those yen and invest in higher yielding assets, usually dollar assets. So that was helping risk, the risk environment. But now, all those people who've been borrowing in yen, it's going against them. If they borrowed yen at 120 to the dollar, and now it's 100 to the dollar, they're losing 20% on that currency trade. And let's say the stock market is up 10% in the US, they're still losing 10. So we need to keep an eye on this and see, on the dollar yen. So the dollar's just dropped below 100, and that's a very key psychological level. It's trying to get back to the 100 level, but keep an eye on it. Gold is doing well. It's at 1350, up 13. I think that's a little bit of a result of that move in the dollar yen. So if you enjoyed this video, please like, share, and subscribe. And we accept donations, any small amount or whatever you want to give. There's a few links below for PayPal, Bitcoin, and Patreon. Thanks for watching. Bye.